Mercado Libre is the largest e-commerce platform in Latin America, focused especially on Brazil, Mexico, and Argentina. This local focus allows it to maintain a competitive edge over Amazon. But recently, its stock price plummeted by 16% in one day. So today we are going to go through our 7-step process for analyzing a company to find out why the price dropped so much. Is it a short-term thing or a long-term problem? And finally, we are going to answer the most important question. Is Mercado Libre a good investment opportunity at this new price? Is it better than Amazon? But before we do that, let's see the recent results that caused the 16% drop in stock price. Revenue is up by 37.6% year over year. Net income is up by 54.7%. Cash is down by 15.4% since the beginning of the year, and debt is up by 40.8%. So why did the stock go down after such growth of revenue and earnings? Well, profit margins went down from 9.5% to 7.5%, and earnings per share are below the expected $10. Also, investor sentiment turned negative due to concerns over strategic long-term investments in credit and logistics. If you were to invest $1,000 into this company 10 years ago, you could buy around 7 shares, and now they would be worth something close to $13,892. And this company used to pay dividends, so in that time you would get $17 as dividends. So if we add together the current value of shares and those dividends, we get $13,909, and that is a gain of 1,290% in 10 years. When I see results like that, it's hard not to feel regret. Even though 10 years ago I didn't even know that such a company existed, I still feel regret. Individual insiders, that is an X, only 0.1% of the company is owned by individual insiders, and we would like to see this number over 2%. So the management does not have its skin in the game. And are individual insiders buying? That is an X. In the last year, we don't see any transactions from insiders. And do super investors own this company? That is a check. There are 2 super investors that own shares of Mercado Libre, and they are Lee Ainsley and Polen Capital Management. And are super investors buying right now? That is an X. Last transactions we saw are sale transactions of over 9,000 shares. Return on invested capital, that is an X at 4.8% 10-year median returns. And we want to see this number higher than 10%, so the result is a bit disappointing. And what do we know about net profit margin? It is a check at 7.5%, and the industry median is 4.9%. So that is okay, even though the margins recently dropped a bit. And now let's take a look at share buyback. It is an X. They issued 14.8% new shares in the last 10 years. So unfortunately, they are diluting long-term investors. But maybe they are doing so to get extra cash and not to get into debt. It is a check. It would take just over half a year to pay the long-term debt with a current free cash flow. So Mercado Libre does not have any problems regarding debt. Revenue growth, that is a check at 40.8% 10-year compound annual growth rate. And we would like to see this number higher than 10%, so such growth is out of this world. And free cash flow growth, that is also a check at 66.2% in the last 10 years. Now, that is just nuts. And earnings per share growth, that is a check at 22% in the last 10 years. Now, this growth is lower partly because Mercado Libre is issuing new shares. So earnings are divided between a bigger number of shares. Well, growth looks very, very impressive. Mercado Libre stopped paying dividends in 2018. So right now they are putting all of their earnings back into the company to generate growth and, thanks to it, fight with competitors such as Amazon. Price to earnings ratio is 67.8. That is very high. Even when we take into account that the current average PE of the S&P 500 is 30.5, it still is high. So it looks like Mercado Libre is very expensive right now. But maybe the PE ratio is a bit misleading. Let's use a discounted cash flow analysis to find the intrinsic value, and for that we will create 3 scenarios of its future growth. So in the low scenario, we'll estimate a growth of 9% for the first 5 years, and then 7%, in the medium 12%, and then 10%, and in the high scenario 17%, and then 14% growth. So the low scenario is close to the predicted worldwide growth of the industry, which is around 9.5% in the next few years. Medium is showing a story in which Mercado Libre outperforms its competitors, and the high one is much closer to the growth rate we saw in the last decade, still significantly slower, but closer. So with such estimates, the intrinsic value in the low scenario is $1,809, in the medium $2,250, and in the high scenario $3,134. But we have to always apply a margin of safety to those prices. I use a 30% one, and with such a margin we get in the low scenario $1,266, in the medium $1,575, and in the high one $2,294. And the current price is around $1,961. So we have medium scenario without the margin of safety in the green, and also high scenario with and without the margin of safety in the green. It looks like Mercado Libre is somewhere close to fair value. Mercado Libre has an absolutely incredible growth and is around its fair value. But unfortunately, it is also diluting investors on a meaningful scale. But to better understand Mercado Libre and its strengths and weaknesses, we should compare it to the likes of Amazon or Alibaba. For that, we are going to use our Stock Ranking Pro, which you can get access to by becoming a Patreon. First, let's group the ranking and look only at the broadline retail industry. So we have 6 companies here, and if we sort them by the value difference, we see that Mercado Libre is much cheaper than Amazon, but Pinduoduo and Alibaba are cheaper than Mercado Libre. And when we sort them by the growth score, we see that Mercado Libre is second. Only Pinduoduo has a more impressive growth. Actually, let's see how Mercado Libre looks when compared to all 100 companies in our ranking. It is the 10th best company when it comes to growth. And when we look at the overview, it's pretty obvious that growth and only growth is a really strong point for this company. If you would like to learn more about some of its competitors, then check out my analysis of Alibaba or Pinduoduo. Thanks for watching and See you in the next one.